I think we're live. Hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Face. This is going to be a really good one. You can see who I'm hanging out with, I am with Murad Mahmudov, David Puell, and of course Willy, who you've seen on the show many times. And you guys were on the show as well. I believe we did a show back in March, end of March, where we had a little bit of a debate if Bitcoin had bottomed. And I have to say that, hey, you and your team, you guys definitely called it right, calling the bottom at 3,000. And of course, the team I'm talking about is Adaptive Capital. So that would probably be the first question after these guys introduce themselves, how it's been going, getting a fund off the ground in general. So go ahead, guys, brief intros. I guess we'll start with Murad, probably you're the initiator of this whole initiative, I'm assuming.
Yeah, hi guys. Tone, thank you for having us once again. Huge pleasure to be here. The fund has been we started midsummer, going quite well so far. It's kind of a lot of work. Takes a lot more effort to run a fund rather than trading your own money, but going well so far.
All right, excellent. David, a little bit of an introduction, and how'd you even meet these guys?
Well, we actually met online pretty much in different times. I met Murad online about a year ago, over a year ago, year and 2 months ago, something like that. I'm David Puell. I'm head of research in Adaptive Capital. I'm most known for a lot of the on-chain research I've done with Willy and Murad as well, from the MVRV ratio to some stuff in dormancy, the Puell multiple, and I don't remember what else. A few other.
Lots of stuff you can't talk about.
Yeah, and other stuff that I can.
I'm going to ask you about the Puell multiple.
Oh, cool.
You got something named after you. That's good.
Yeah, I had to put my brand on it.
I know, you got to do it.
And, well, Willy now.
Oh, hi. I don't know if we need much of introduction, but yeah, it's been great just working with these guys. I'm like, I've been creating these on-chain indicators for a while, and pretty much David and I have been collaborating for, I guess, since the start of the year. It's been really fun. And I never thought I'd be part of the hedge fund. I thought, screw that. But we've been just collaborating naturally, organically, and I feel like, I feel like the grandpa, and these guys are the young hot shots with the next generation of brains coming into the space, and I felt like it was cool to work with smart minds. So it's been fun so far. Murad does a lot of the key trading, so does David here, and then David and I scheme on a lot of the on-chain analysis, the longer range stuff.
All right, good to hear. We're getting some complaints about the quality, guys. I'm sorry, not much I can do. I am running my own hotspot here.
Is that quality of voice or quality of video?
They're saying quality of video.
Okay.
But you and I have, you and I have the same data, Willy, so me switching to yours won't really help, so that's okay. Yeah, sorry guys, the best we can do at the moment, it's not that bad because I'm also watching it live at 720. Let me see, I'm checking it now. Oh, it's not that bad. I'll definitely take that. That's our quality right here.
Right. You can drop that to lower resolution because we just want the chat room up.
Oh yeah, no, I was just checking. I'm actually paused it. It doesn't matter what the resolution is. We got the chat room here. All right, guys. Yep, it'll be the best we can do, but we're mostly going to talk. So as long as the audio is coming in loud and clear, which I should also double check on, going to be okay. And the audio is set correctly. All right, guys. So first question before we get into the actual charts, what's it like starting a fund? I've never been involved in one. Always thought that I would be, the opposite of Willy. Probably, I know I was in borderline talking about it with Lucid. Unfortunately, that's due to Tyler's unfortunate death. There won't be the Lucid Investment Fund. And so what was it like? What's the process like? Is this something that, you guys always wanted? How did that go? How's that coming about?
Yeah, I mean, it will probably take you at least 6 months to set up if you pursue something like this, because there's kind of a bunch of paperwork and bureaucracy and registrations involved. But yeah, I mean, as I've already said, there's definitely a lot more requirements than if you were just trading your own proprietary capital. But eventually, you kind of get used to it, especially after you get all of the administrative things down.
All right. So let's talk about the general, I guess, landscape of Bitcoin. You guys were bullish back in April, back in late March, early April, and the price ran up all the way to 14,000. Is that something that you guys expected it to go up that high, or did it definitely overshoot your expectations? And what did you think when the price went up so quickly from the $7,000 area doubling to 14? Anybody can jump in.
For sure, we weren't expecting that fast of a rise in price, like especially the quickness of it. That being said, quarterly resistance, which was about 13.8K, was very strong resistance historically. Like every time we get there, we consolidate that area, and then even for several months, and then rip again, right? So right now, 14K was pretty much to the cent the resistance. At least that would have called somewhat of a big correction, 35 to 40% as usual in Bitcoin, and then followed by a very long consolidation, which is pretty much what we're getting right now.
Right, and that's going to be the big question. So initially we corrected 30% off the 14K. I'm calling it 14. It was really 13.8. And it initially corrected 30%, which was my bare minimum for a buy the dip situation. That's what I kept waiting for. I kept waiting for a minimum of a 30% correction once we started going above 6K. We eventually got it from 13.8 down to, I don't know, like
9,045.
Yeah. But then we went a little bit lower than that. We already hit 9.2, and then recently we hit 9.4 again. So the overall correction, I believe, has been about 34%. The big question is that enough? Or is there going to be one more dip sub 9,000? And I've been watching that daily descending triangle, and I know that a descending triangle at the top is different than a descending triangle at the bottom. But to me, a descending triangle is a descending triangle. So I'm still looking for the big one more drop from the $9,000 range. And at the end of the show, we're going to talk about, if you guys agree that one more drop is still coming, like how bad can it get? Or is it just going to be small, like maybe an extra 1,000 down? So are you guys still overall leaning that we're going to go sub 9,000 before the eventual rise with the halving?
You want to grab that?
If you just look at the funding rates right now, locally or
you know what? Let's pull up the funding
bearish.
rates. You know what? Maybe it's time for some screen share. Let me go to. Well, this is Willy's site, but
it's all public.
Well, the funding rates, like
yeah.
I've talked about it like for a while.
Yeah, no, I haven't shown the chart of funding rates in a while. It was on the same chart as the longs and shorts on Bitfinex, but I don't know how accurate that stuff is, though I'd like your opinion on that.
I know you said
The thing is, the long and shorts on Bitfinex is like 1/10 of volume. So like often you see a disagreement, and Bitfinex always outweighs it.
So
and Phoenix is like, it could be a single actor.
So before we talk about the effect of or the predictory nature of the BitMax funding rate, David, why don't you just briefly explain what the BitMax funding rate is? And you can see right here, when the funding rate is positive, that tends to call local tops. Here is again a big cluster calling a local top right here and right there. I don't know if people can see that cursor, but so let's start with the definitions. What is the BitMax funding rate?
So the funding rates is a mechanism used on BitMax, which is the largest exchange, not only derivatives exchange, but exchange in crypto. in the industry. As a result, it has the most liquidity, so a lot of what goes on in there is extremely relevant for getting trading signals and just a general feel of the market sentiment. So BitMEX is not a spot exchange. You cannot trade Bitcoin directly there. You need, you trade contracts. And the most traded contract in there, you got futures and you have the perpetual swap. So the perpetual swap, you buy or sell it, similar to Bitcoin. You go long or short with leverage from 1 to 100, right? So the mechanism that BitMEX put in place in order to peg the price of the contract to the price of Bitcoin, right? Which is the price of the oracle, they call it, which is the average of Kraken, Bitstamp, and Coinbase. You have to incentivize people going short and long to close their positions if there are too many longs or too many shorts. So what they do is, if there's an abundance of longs, they have to pay shorts. In that case, the rates go positive. And that determines that.
So you're basically charged, if you're holding the perpetual,
Yeah.
you're being charged a fee if there are way more longs than shorts,
Mhm.
and that fee goes to the shorts.
Exactly, and vice versa.
And BitMEX takes a cut on that fee, I'm sure.
Actually, no,
They don't.
They don't take any cuts on the on the rates.
That's good to know.
And so yeah, out of that, you know, if funding rates go positive, that means that most people are long, and vice versa. Most people are short if they are negative. So out of that, you can make two assumptions. First principle. The first one is, okay, you don't want to do what the majority is doing because the market tends to punish the most people. So if everyone is long, you should be shorting, right? But more than that, which could be a little bit simplistic, since a lot of the arbing market makings, like pretty much every liquidity game in the industry has to go through BitMEX because it's the center of liquidity. If you're a whale, it's much more expensive to go long if the funding rates are long. Like you can get, if your position is large enough, you have to pay a lot, like a Bitcoin every 8 hours, 2 Bitcoins every 8 hours.
Wow.
If your position is large enough, yeah. So you can lose a lot of money.
So what's the rate right now?
The rate?
0.032.
And
Positive rate is majority long.
Yeah.
So it's 0.032.
0.032.
So it's about 3%.
No, it's 0.03%.
0.03%.
Every 8 hours.
Every 8 hours.
Every 8 hours. Okay.
Which adds up.
So every 8 hours, 0.03% on your entire position.
Yes.
Yep.
Okay. Got
So
it.
if you're a huge whale with a huge position, you have the incentive to actually close it because you're getting chewed up every 8 hours at the very least, right? So if you have a lot of liquidity, you have the incentives to actually go short and dump on the market at spot in one of the Oracle exchanges, or just in Binance, right? Because a lot of the arbing goes through Binance as well. So, you know, based on that, you can actually use it as a very sound predictor of market behavior, both up and down, and it's been very useful so far. So right now, this is a chart.
People are saying it's 0.003% for 24 hours.
03
So they chopped that
hours.
up into 4 pieces, maybe?
Is that of a percent or is that's, oh, he retracted that.
No.
Oh, okay.
No, that's for each
It's
8 hours.
Ah,
Is it
yeah.
0.03%?
So you got to multiply that by 3 even more if you wanted to per
So
day.
that's a 26x in interest rates per annum. If it's 0.03%. No, 0.3%. It's a
No,
point-
0.03%.
Okay, let me work that out. 0.03% equals 38.9% per annum interest rate
Yeah. If
Yeah.
you hold that position for a year.
for a year,
Yep.
compounded.
So anyway, the chart you're looking at right now, it pretty much gives you a sense of, this is an indicator created by Neobutane. It's freely available on TradingView, BitMEX funding and premium index. The funding rates are calculated by the premium. The premium is, you could say, the delta between the price of the perp and the price of the oracle. So when you get that difference, you can see predict the funding rates, whether positive or negative. So what this indicator does is calculates the premium, and out of that, it pulls the funding rates, the predictive funding rates on real-time manner.
It kind of balances out the trades because it's all futures. Everyone's got to take the other side of the trade. So if there's more demand on the long side, you've got to pay the shorters more to maintain their short. So when it swings positive, it means we've got a lot of people demanding long, we're incentivizing shorters to get into the market. And so when it goes super, super, super long, retail, generally the majority, they're usually wrong. So if you counter trade the funding rates, if it's a positive funding rate, then it's very bearish on the price. And in fact, it's the retail usually are wrong because the whales will take the other side of the trade because it's very profitable to squeeze them out in a short squeeze or a long squeeze.
Exactly. That's exactly what happened when we had our last video together.
Mm-hmm.
So you could see that even though the market was pumping and pumping and pumping, everyone was short. And that was pretty much the definition of a short squeeze.
So when in 1st April, when we saw that pop, we saw a massive climb to the 5,000s, and it sliced right through the 6,000s. And the reason why it sliced through 6,000 when you thought there was a huge resistance band was everyone thought that would bounce as a resistance. Because everyone was saying it was going to bounce, you could see these funding rates being massively long, and it was just easy money. If you've got like, say,
massively short.
I think it was around $500 million of account size, you could take out all of those shorts and bank that money. And people just kept going short until we reached 14,000. That was the only time where people gave up on the
we actually went positive a little bit on the tops at the last two consolidation, but it reset.
Regionally, it kept resetting.
We reset to negative quite well.
So
I can actually pull it up during that.
And the interesting thing about that 14,000, it's the monthly close all-time high 14,000. So there was a huge resistance. So I think if we close monthly above the 14,000, that'll be the next run. So that's a key level for we're talking over the year. If we close around above 14,000, we'll probably slice through the 20,000 all-time high pretty quickly.
Yeah, if we close 14K with conviction, you're never seeing prices below that ever again.
What's the name of that BitMax indicator? I'm sure I figured.
You gotta type in funding.
Neobutane. This indicator will cease to work very well now that we're telling everybody.
Well, no, I've had it up before. This isn't the first time I'm discussing it. I thought I had
You
it.
gotta type funding.
When did you bring it up? Because this indicator has ceased to work as well in the last month and a half.
Maybe it's a new one. So what am I looking for?
It's still working a little bit.
It's still working.
But it's
Murad,
hard.
what am I searching for?
The strength of it's like less.
Yeah. Well, that's also because we have a choppy market.
So it depends on whether the markets are driven by spot or derivatives. So if
a lot of options there.
if large institutions are buying spot, neobutane. Not the toolbox, not the toolbox.
It's a touch screen.
Oh, sorry.
Thing is, a lot of that's OTC.
It's this one, no?
Yeah. So if the market is driven by spot, you can even have a situation where everything's going up and you like continue having negative rates because people are buying spot rather than derivatives. So it really depends on what is the price driver at the moment.
So and here's the chart that you sent me. This is this one.
Yeah.
Let's pull that up as well.
Where can I get Murad Spotify playlist?
All right, so while that loads, we are dealing with slightly slower connection. So doesn't this create a really good direction neutral opportunity where if the funding rates, let's say, are very high, you short the perpetual, and then to offset that position, you go long in a futures contract that doesn't charge you a daily fee at all?
Yep.
I know a lot of traders that
you can use it as
play
hedge.
a hedge very low risk game.
I mean, there's still risks involved, of course.
Yeah, like if a price.
Depending on the spread between the.
Sometimes these inefficiencies that open up and it's just free money. Like literally, you cannot lose.
All right. So what are we looking at over here, Murad?
So I think a lot of the people in the West, they're not studying OKX and Huobi enough. And that's where huge sums of volume actually pass through. This is a very interesting indicator that OKX has recently started publishing. It measures not the longs and shorts in aggregate, but it measures the number of users that are long divided by the number of users that are short. And this has been climbing higher and higher in the last several weeks. This actually means that, at least to me, that the most people are short. So this doesn't actually tell you about like the aggregate volumes, but this means that most users are long and the few users are short. Likely to me, this means that most retail participants are long at the moment, while kind of the bigger players are short. And typically, I would say that that's not a good sign.
And it aligns with BitMEX right now.
Right.
Right. So I pulled up the BitMEX indicator. Let me see if I can maximize it at full screen.
Funding rates and contango was one of the reasons Untitled Gold actually called the drop from.
There we go.
Yeah.
And if I go back to, oh, here it is. This is the daily chart.
Yeah. That's
so
perfect.
If we go back to end of year, and it was very negative for a while going into April. And end of March, this is where we were doing our shows.
Exactly.
And this is why you guys were still pretty bullish on the market.
We're expecting more short squeeze. So pretty much the first stage of the parabola, quote unquote, was just driven by short squeezing.
We were
all the shorters.
We were actually bullish at the bottom because of on-chain. Not so much the technicals on these, but that was further confirmation.
If you put the price on that, I can go through a little bit of.
Right. So right here, it's gonna get a little squeezed. I don't know if I want to remove all of my other indicators, but
make it larger.
Yeah. Come on, move. So all throughout this period here,
as you can see, so
give me 1 second. I'll zoom this out a little. Slide this over. Come on. There we go. Let me zoom it out a little bit. There we go. So all throughout this period, the BitMEX funding rate was very negative, and then we had this massive short squeeze.
Right. So even before that, like you have the descending triangle from 20. What was it?
Yeah, the earlier. That's the weekly. Probably easier to look at the weekly chart, which is right here.
You had positive funding rates and a very low volatility at the squeeze of that descending triangle. Exactly. And the price completely dumped and capitulated.
Oh, where'd my chart go? There it is. There it is.
Right. So
yeah,
at this stage right here,
still very big positive funding rates.
Untitled Gold was calling the drop based on contango and positive funding rates at this stage. They weren't like every drop we had here and here, all the dead cat bounces were actually, you found both backwardation and negative funding rates at each bottom.
And that creates a beautiful opportunity to take advantage of the spread.
Yeah. So when we got to the apex of the descending triangle, rates started going positive, and you wanted to be short, market dumped, and right as soon as the dump commenced, this whole area was negative funding rates, like severe negative funding rates. Then we popped up, negative funding rates continued, and it was until this stop or so when we started having positive funding rates again. So pretty much all this market structure from the beginning of the drop, the whole triangle.
I don't know if people can see the mouse, but I'll just, do
the whole
that.
Triangle in 20.
Use the control key.
Control key. Okay. This whole area.
Yeah, just click on that.
Was negative funding rates and shorts getting squeezed until this top and the current top at 14K. The funding rates went positive like crazy.
And they've been positive, so that creates an environment where the price should take a dive. And we're going to talk about the potential of how big or how shallow that dive will be. So Willy, let's Oh, you know what, David? Let's go through your charts and then we'll head over to Willy for some on-chain volume updates.
Cool.
So besides the BitMEX fund rate, which hopefully people are now familiar with, let's talk about some other charts. What are we looking at here?
This is the SOPR. What's the spent
output price ratio.
Yeah, I always forget. It was created by a guy called Renato Shirakashi, a very good analyst specialized in on-chain stuff. And what it does, you want to go through more or less the...
Yeah. If you guys are familiar with Nick Carter from Coinmetrics, realized price kind of tracks the value in the wallets. When did those funds arrive? It measures the price when it arrives. So it kind of measures all the guys that are hodling Bitcoin, what average price they bought in at. Now, spent output ratio is the opposite. It's like today, whoever's spending out their coins, selling their coins, we measure what price those coins they bought in on. But it's the people that traded out. So it measures the profit of those people who exited on any particular day. So it's sort of you can use it as a short-term indicator, and it's absolute antithesis of realized price.
It works well for swing movements in the market. So the idea of SOPR, by the way, you can check it out live on Glassnode Studio, which is a site for on-chain analytics and all that. It has the original version by Renato. And so what it does is whenever it's a simple oscillator. In bull markets, whenever it drops to 1, because it's a ratio, right?
1 meaning what they bought in at, the price is neutral, zero profit for those guys.
So there's no profit for the ones exiting. That marks usually the bottoms. And in bear markets, so in bull markets, it tends to go up because everyone's making actual profits, right? So it goes up. If it goes up very much, that means we're getting into a local top, as we've seen.
I'm just gonna jump in on the screen share if I can share. Oh, you guys got it.
Yeah,
so.
there's an example of a local top where the oscillator was super high. There's another example of that.
Is this something we can pull up on TradingView or no?
No,
Not yet?
it uses on-chain data, and it's live. So you actually, like Renato actually invented it by getting a full node and all that.
I'll probably pull it up on my site.
But I wonder if it's something that you could do, let's say, end of day, and just send the data to the end of day data as a server and have that as an indicator, as a end of day indicator, not a live one.
I think on TradingView, you can get it from an API like Quandle, because you can get Quandle in TradingView.
Oh, is that how that guy's doing the NVT signal?
Yeah,
because we haven't figured out a way to inject data.
Right. So I mean, like doing it in real time is insane. But if you could just import one piece of data end of day, and then you display that.
Possible, but yeah, we like I'll just plug Coinmetrics here. They give us like all the data on Puell is Coinmetrics. That's a hedge fund product, and they've given it to me for free to do these charts, free to the community. So just want to plug them, and so I might put that up for the community on my site in due time with their permission. But a lot of the on-chain stuff you're seeing on my site, which is looking into the blockchain network, is really provided free by Coinmetrics for that purpose.
Yep.
All right, so this is the same thing, only zoomed in, or it's different parameters?
No, this is applying a 7-day moving average to the oscillator, like, which is a bit noisier and gives you the local bottoms a little bit more precisely. But with this one, you can actually confirm that the bottom is in. So you have moments like this, let's say, right? When you don't actually get to the line here, which is the 1, right? So it kind of got here to the 1, but we may need a moment like this one where the 1 is actually penetrated, right? Like the green arrows. So we can call it bottom. So far, this right here may be calling for a bottom, and all all the local bottoms have been called by the SOPR so far.
So what day did this last one take place? That was like very early September?
The last local low, yeah, early September.
So
Yeah,
it's like September 1st.
We've got a bit more time before the bottoms.
Let me see what the daily chart of very early September looks
So it's a
like.
good confirmator because sometimes it gets noisy with a simple SOPR, but if you use the moving average one, normalized.
We're right on the 1.0 line
Oh yeah.
on this one.
Yeah.
My one's slightly different from last night.
Yeah, because we have like Coinmetrics extracts the data differently than what Glassnode uses. So it's good to check
it's
both of them.
slightly different.
And yeah, September 1st, right there, we had a bit of a local bottom as we hit the bottom of the triangle.
Yep.
The thing is, we
Exactly.
don't dip below one very deeply in a bull market. So the data I've got is it's just dipped slightly below, but it's right on the one. So you kind of
you get 0.99 or stuff like that, and that's pretty much calling the bottom.
Let me just make sure this is.
And every single time we've had a local bottom, the simple SOPR has gone to 0.99 or just one.
All right, we got two more of your charts, and then we'll head over to Willy's chart.
This is very local, and it's supposed to be used with precaution, but it's just a way to understand how price may be diverging from volume, which is one of the things I like to do pretty much all the time.
Okay.
This is OVV. It says better OVV, but I have it at the same status as the regular OVV, which is the unbalanced volume. The way unbalanced volume works is for every period you have a green candle, it adds the volume of that period. It's a cumulative indicator. For every red candle, it subtracts. And for every neutral candle, it does nothing, right? So the way I gauge divergences in the same principle as you've taught with RSI and the other oscillators, you can apply them as well to OVV. So for instance, right now on a very local level, we have a bullish hidden divergence. There's a difference between regular and hidden divergences. The regular divergence is a bullish regular divergence would be when you have a higher low on price and a higher low on the oscillator and a lower low on price, right? In this case, we have a hidden one, which is a lower low on the oscillator and a higher low on price, which means that, as you see here, above we have the price, it's making higher lows, and the oscillator is given lower lows, which means that most of the volume in every sell-off has been absorbed by buyers because price is not matching the oscillator, which it's normalized by volume, right? So it's locally, on a very local level, bullish, maybe for a scalp or so, one last pump. But given the funding rates and the fact that funding rates have been positive for so long, usually in funding rates, the longer the signal, the better the signal. Makes me think, given the low volatility, that we may wick down into the 8K region soonish. Right?
Yeah, and it was interesting because I was hanging out with you guys last night, and we all watched the big dump, like the $200 drop or like 150, whatever it was. And right here, exactly 12 hours ago, right at current price levels, you were very confident that the price was imminent for a pop. And this was the chart you were looking at.
Yeah.
So you were very confident in this pump. I was less confident in this pump, but this also goes into a different time horizon. Like, I don't really care about the 15-minute time frame, which is what you were looking at. And for me, I was still anticipating, hey, we're probably going to get to the bottom of the triangle, and then we can probably have, like, a $500 move once again, because I don't think the triangle is ready to break down. I think that's going to happen in October. So at the same time, you were looking for a pump, and you were absolutely right. But here we are 12 hours later, and we're back at the same price as we were when we were discussing it. And I'm expecting this uptrend to break pretty much in the next 12 to 24 hours.
That's the thing. Like you have to follow the trend, right? So right here, yes, we had a hidden bullish divergence, but as soon as we popped with no volume, you had a regular bearish divergence. So that like you have to go with the trend unless you're scalping, right?
Yep. And we got one last chart from you. So this is pretty much the same. Oh, no, the same thing.
No, this is Litecoin.
Using our this is Litecoin.
Yeah, this is Litecoin.
Oh yeah, because we were talking about it yesterday. Litecoin and Ethereum, they seem to be pumping right now. Is this something very temporary, or is the old season back for a little while?
I don't believe, like, unless Bitcoin fully bottoms, I don't believe in an alt season at all. Now, last time, one of the greater indicators for the bottom being on Bitcoin was Litecoin pumping incredibly, right? Alt season, well, it wasn't alt season. Like, there's a myth going around that we have had all season, but I don't believe we have had that since the bear market in 2018. Like, the correlations have spiked from 0.6 to 0.9, and you cannot get beta from alts anymore since December 2018.
So let me ask you guys this: like, in your fund, is like 90% Bitcoin trading and maybe 10% altcoin trading? Do you even touch it? Do you focus a lot on altcoin trading?
As of now, we haven't focused on alt very much. We focus on Bitcoin, allocation on Bitcoin, and balancing that out. And then we're going to start looking into alts when the moment comes.
For us, the altcoins in terms of trade positions, they're too illiquid. There's not enough volume going through them, so we can't actually trade in and out very fluidly. Our idea was potentially to use them as a longer term long trade if alt season hits, so that we can buy the coins, take them off the exchanges, hold them for many months without the counterparty risk. But there's this thing where people think that altcoins amplify Bitcoin's movement. So on a bull, we get more gains on altcoins, and that's obviously debunked in this bull season. And I did a little bit of research in the last few months, and you can see even in prior cycles that's not actually the case. So everyone was drawing their conclusions of a very tight band of behavior, and mainly emphasized in the 2016 to 2017 cycle. So this idea that alts outperform Bitcoin is bunk. I guess we all know that now, and certainly altcoins don't look very strong in this cycle. This is a very special cycle where we've got a lot of institutional money starting to come in. It hasn't come in full bore yet, but there's a significant amount of influence by the institutional money coming in, even as they're starting to play with it. And they're going to seek the biggest liquidity pool, which is Bitcoin. So when they start to seek that, Bitcoin pumps, and then all retail starts to buy Bitcoin instead of the shit coins, because they follow whatever's rising. So
especially because it's very hard to have a valuation, especially from an institutional perspective. Like, a lot of what we do is on-chain stuff, but even that is a way to look at price relative models as opposed to fundamental valuation models like institutions have, right? So they're going to look at the charts and put their money into what's pumping, and has like a brand. And
can you just share, get me into the Zoom?
Yeah, I'll get Willy into one second.
I've got the altcoin chart.
I do have like just two questions from the live audience that I want to address, and then we'll head over to Willy's charts. You good, David, or you wanted to finish that train of thought?
No, I'm good.
All right. So the first question is, people do remember how Murad and a lot of us, you guys were, when we initially went down to 3,200, this was back in November, back at that time. You guys were still bearish, looking for 2,800, maybe even a little bit lower. I remember that as well. And the question is, then you guys changed your mind early in the year, and they're asking why was that? My assumption is on-chain volume, on-chain action made you say that, hey, you know what? We're actually not going to go lower than 32. We were looking for 2,000s. and you guys changed your mind around January, February-ish, maybe even December?
February, March, we actually had this
February, March.
emergency call going because we were all bearish, all three of us. And then some of the research that came in on one particular day said, shit, we're all wrong. And we had an emergency call. And then we switched.
The first hints of that was, for me at least, it was delta cap, which is one of the indicators I invented that pretty much cut the bottom to the cent. And then alts pumping, Litecoin especially.
We had this curiosity where half of our on-chain indicators were saying the bottom was in, and the other half was saying it's bearish. And everything that was saying bearish relied on volume. And around that time,
from blockchain.info.
From blockchain.info, BChain. So then there was two things that happened. One was I back tested the volume from BChain, and I back tested another approximation of volume using the volume going into wallets that were less than 24 hours old, and that didn't look that bearish. And these things are locked tandem through the whole history of Bitcoin. And at the same time, Nick Carter at Coinmetrics came up with their own indicator of volume, which is an independent method. And when we saw both of these volumes being much more bullish, and we put them through our indicators using a much more correct volume, they all said bullish. And that was the final bit of the mystery. And actually the Coinmetrics stuff was so high resolution, you could see the fractal pattern of the bottom.
The signature, right?
Yeah, and that's when we said, yeah, the bottom's in. And that was, in that point, we were going to launch in May, and we were in a race because we knew that the bottom was in, and we wanted to close the fund and launch it at the very bottom.
Yeah, but the price got
it got ahead of us. It broke out on April 1st.
Right. Yeah. So just to get the timeline straight with the chart, so around early March, so around this area with the price of Bitcoin hovering between 3,500 and 3,800, about 3 months after the low, that's when you guys had enough on-chain data to be confident that the bottom was in.
We also knew that it was going to be very compressed. I think I said that in your show. I was in South by Southwest at the time, and I said, like, picking up a lot of hidden accumulation down on the bear cycle. All the bears usually get some divestment, a lot of people selling off. And the 2018 bear, we actually saw a lot of buyers come in and match that, such that on-chain OBV never went down, and we've never seen that. We saw massive accumulation in the bear, so that meant that at the bottom of that accumulation band, it would be faster.
That's for sure. The typical behavior we're seeing this cycle only, which is a lot more lockup and hodling from OGs or people who bought from the last bear. The destruction, for instance, which is the days destroyed, which is the amount of days on average a coin remains unmoved, or the coins on aggregate remain unmoved. They have been extremely low from the start of the bear market in 2018. For sure, a lot of people, including very OG people from 2012, 2013, 14. They're not selling their Bitcoins, and that's very atypical.
Yeah, I can cover that actually.
All right, and yeah, just so people know what my thinking was at the time, that's when we did the show. Now, I was in bullish trades. I was in a bullish trade as a 4,000 looking for a pop to 5.5. If you go back to those videos from those time, from the early, from the February days, actually someone sent me one the other day, I was one of the few people that was looking for a bull trap at 5.1, and everyone else was making fun of me for even being bullish in January, February. Now, my expectation was that we would go up from 3,000 to 5.1 and as high as 6.4. But then I still expected a lower low. I was still looking for sub 3,000 then after. And if that didn't happen, in order for me to become a bull, I needed a 30+% correction. And we finally got it off of the $13.8 thousand high. But I still think the $9,000 low will be broken to the downside. And then hopefully there's a good dip buying opportunity. Okay, one more question before we go on to Willy's charts. And that comes from Sim that says, with Bitcoin settled and cash settled futures, what will stop the Bitcoin price being controlled by cash settled leveraged contracts increasing supply like gold? This is a giant misconception. I've been fighting this misconception for 3 years trying to educate people. Cash settled anything doesn't do shit to the price. It's all about the physically settled contracts or spot price. Now, it doesn't actually have to be physically settled. The threat of physically settled is enough to control the price. For example, the futures of gold is the price, determine the price of gold. 90% of all futures in gold do not physically settle. Maybe even 95% do not physically settle. They are cash settled because both sides close the trade because it's cheaper for them to pay each other cash than actually go out, buy the gold and ship it to you. But the threat that that is actually possible is what determines the price of gold. If you think that a cash settled futures contract controls the underlying price of the asset, then you're the kind of person that believes that the S&P futures control the price of the stock market and not the price of the actual stocks. So, and I actually argued this with Ugly Old Goat as well. Like, guys, if it's not physically settled, or if there's no threat of physically settled, it's basically, it's kind of like saying, if I make a bet with David Puell on whether Trump is going to get reelected, that somehow affects Trump's reelection. And the answer is it doesn't, okay? If him and I bet on the price of Apple stock and what it's going to do, and we settle it in cash at the end of the day, that has zero effect on the price of Apple stock. So if it's only a cash settled contract, it has no effect. It needs to be physically settled, or there needs to be a threat of physically settled because both sides could demand settlement by not closing the contract going into expiration date. So that's what you have to consider.
Another thing that why I remain somewhat skeptical of using basis for getting a trading signal like contango macrodation, the liquidity in futures is very low compared to the perpetual contract. So I much rather use funding rates to get some market sentiment as opposed to basis, right? Also, Ugly Old Goat suggests that miners use a lot of the futures for hedging. I disagree.
I disagree a little bit on that as well.
Yeah, I think most of them just sell on spot and don't worry about it. I know only like 2 miners who have sophisticated trading strategies around the business model, but most of them were previously traders and then very atypical in the mining industry. Yeah. And also the increasingly high stock to flow ratio of Bitcoin, in my opinion, diminishes the selling pressure coming from miners always, like increasingly so. And at this point, I don't think they hold that much of a whale power as initially.
No, real quick, this gives me a chance to plug the Bali event, which Willy will be attending. Unfortunately, you guys are busy with the fund and can't make it. And there's actually a couple of miners that are going to let me know this week if they're going to come, because they are very much interested in having better risk management, better risk parameters. So there are miners that are interested in learning how to trade, at least from a hedging perspective. Yep. And an event like this would be beneficial to them because they'll get to talk to some actual, traders, get to spend the whole week. So I am talking to 2 miners right now, and they will potentially send a representative to the event. You can check it out. It's a way to connect traders and funds. Oh, I'm going to be adding one more fund to this list as being represented at the event. probably sometime this week. All right, Willy, your turn. Let's
Sure.
see your charts. Let me hand off screen share to you.
Let me just.
You should now be able
I'm gonna
to
get
enter.
quick water right quick.
Okay, and I hit share, and then I pick.
There he is.
Right. Which one is the right? I find the right window.
Yeah, share the window. You don't want to say.
Window share.
Oh, he gave you the microphone. Okay.
Okay, good.
Yeah, Murad had to go do some trading.
Okay, let's see.
Maybe we'll get him back for the prediction part of the show.
I suppose we should just go back to MVT because that's the mainstay. Like I think I've been saying in previous shows, how much of the supply is now being locked up. This red line traces. Let me turn that one off. Traces the amount of coins that are sitting on exchanges, and you can see we've ramped up from kind of like a basis around 1%. This is around 1% of the coin supply back in 2016, 2017. And now in 2019, we're up at around the 4 to 5%. So we're at a 5x in coins that are now sitting on the exchanges. So what that means is that a lot of our on-chain analysis is not picking up the true kind of HODL volume that's being, the investment volume between investors, because a lot of it's sitting on wallets held in by your exchanges. The other one is in custodial providers, things like BitGo, Coinbase custody for the institutional class guys. And
Fidelity is now doing custody.
You'll see these guys are doing ownership swaps where nothing moves on chain. So we could be literally seeing hundreds of millions of dollars of ownership in Bitcoin not being picked up on the blockchain. And so what that ends up with is, a lot of people are saying NVT is broken. You can see we're highly in a bear zone in NVT, very high, which is unhealthy. It says we're in a bear market. But the reality is that, remember, this is, as NVT goes up, what we're saying is the amount that's traded on chain is very small compared to the total capitalization of the coin. And that's because a lot of it's hidden. So what I've been doing lately is using moving averages to keep track with this increasing lockup. Because if you're familiar with shitcoins, very, very little volume is traded for the amount of coins, and you'll see the MVTs for them, the absolute values, where Bitcoin's up at around the 80 right now. You see them in the 200 or higher, meaning very little volume traded for the valuation. And so what I'm doing now is using these moving averages to track the buy-sell zones. This is not live on Webull yet. It's kind of experimental. I'm going to roll that in soon. And so we're still within the normal bands. I'd be only concerned if it pops up above the red, and we're nowhere near there. We had a little bit of a buy dip at the bottom. So I see nothing.
Yeah, that buy dip came a little bit early. Oh, no, it didn't.
No, it came in after.
I'm sitting on an angle.
It came in after the capitulation.
Okay, it looked to me like it was.
It wasn't the perfect bottom, but yeah, it's so yeah, that's MVT view of things. Let's have a look at maybe something.
Yeah, you should drag the other thing down actually.
The what thing?
That window, just drag it down.
I can drag it down.
Yeah.
What do I hit?
Just anywhere and just hold the button. Oh, well, in there. Yep, and just no. I put it in this anywhere and just hold the button and drag the whole thing down.
Oh, here we go.
Or it's out of your way. If you put it all the way down, it'll also get.
It doesn't go any further.
No, it does. It'll go all the way down.
No,
it doesn't.
Not on the
That's
screen.
weird. Okay.
Yeah, I'm on Mac.
Okay. Cool.
So let's have a look. Just to see this. This is, by the way, guys, we're just going back to the what we were talking about earlier with the altcoin alt season. Now this was alt season back in 2017, where we saw crazy jump, crazy jump, sort of like 10xings, 100xings in some cases above the Bitcoin performance on altcoins. This is a traditional alt season. Very
So
steep rise.
the maroon line is the altcoin market cap x Bitcoin.
Yeah, this is all the altcoin divided by Bitcoin's cap.
Divided by Bitcoin's cap.
Yeah,
Okay.
yeah. So, you know, so the one-to-one line here, which is the equivalent of 50% dominance between altcoins, and is right there, which we had that majority altcoins at this point. And remember, this is ICO season, ERC ICOs, and you know, you raise a whole, you know, 10 million, later it became 100 million, sometimes 300 million in Ethereum using smart contracts, and those teams would then lock up their token treasury in Ethereum. So it would scoop up Ethereum, take it off the market, and actually some of those guys would then take some of their Ethereum and buy other ICOs, and the same thing would recycle. So very much like what you see with the fiat printing press, and this is what fueled the 2017 bubble, going up like this. And just looking at this over a macro landscape since 2013, you can see we're still very high above the normal range that you see for altcoins. Because remember, this is not, when we talk about altcoins, we talk about utility coins, we talk about alternative networks to Bitcoin. And in this zone, these are mainly alternative networks. In this zone, it's alternative networks plus ICO money printing. So even here, we are way above the normal zone. So one thing to note is right now, if you were to draw a trend line hitting all these bottoms, we are hitting on the support zone.
Oh, you think it still holds it?
It dipped slightly, it wicked down, and it pumped up over. And I said that we are looking for a bounce because it's very oversold on altcoins. And you can see this is the weekly RSI. It's on a bullish divergence here. You can use this as a divergence thing. You see the very bearish divergent signal here, where you had a higher high and a lower low on the RSI, and that was the top of the alt market cap. And so I'm expecting a bit of a bounce here. I don't know how high it'll go, a bit of sideways, but when I look at the long-term valuations, which is what these are, we're like still coming out of the, you know, in quote .com of the token market. I think we've still got another year of detox to go before we get back to normal round. So I think maybe it's nice to trade this bull divergence over the next few months, but I can't see this holding into 2020.
Yeah, the other warning is if you think that you're gonna blow your altcoin bags right now and become a millionaire, be careful, because last time we had the Litecoin halving day, and we did like sideways for like a year and a half afterwards. So you may be like on a sideways market for a while.
Yeah, like Litecoin did go after the halving, it went down and then sideways very long time. And
2017 it popped.
I would say Litecoin's very bullish right now in that the difficulty ribbon. I don't think I've shown that one on the show. Have you covered it?
No, we did. We covered it.
Oh yeah, we did. Okay, let's go to the live site. Bitcoin difficulty ribbon. I haven't put it in the main link, but you can go to the Litecoin difficulty ribbon. Type it in, and this is where we are with the Litecoin. And you can see we're coming out of this halvening with a minor capitulation. So inside this zone here, the ribbons flipped negative. So that means that there's less hash rate. That means that there's less miners mining. That means that the sell pressure by these miners are going to be less. The very strongest of miners are surviving, and they're going to hold their coins. So this is very bullish for Litecoin, and Litecoin is a harbinger for Bitcoin. It tends to lead. So my thinking is that Litecoin, it has bottomed just recently,
There's a case for Litecoin bottoming, but I'm wary of it because the funding rates in Bitcoin are still high. So if Bitcoin makes a new low, I think Litecoin will do as
Everything
well.
takes a new low.
Yeah.
Yeah.
But it could outperform Bitcoin.
I think
even if Bitcoin dips.
I think in the long, the funding rates can switch on a dime. I think that I think outside of the next month or so, we're in for a good run on Bitcoin, just on the Litecoin read, and other indicators. But
Hey, if you go back to your list of charts on your general site, what was that? The one that we started talking about that I really started to enjoy.
the VWAP thing, or
Not the VWAP, but though happy to have you explain that one. You've been telling me about it since we were here. There was another one. It's another indicator that I asked you to move the line on and to indicate oversold.
signal, that one.
Yeah.
I don't know if that's the one. That's MVT signal, short-term MVT.
No, I thought you had a new one.
The new line.
Oh, you have the Mayer multiple there now?
Yeah, got Mayer multiple. We've got David and Murad's MVRV ratio over here, which, let's go through some of these charts. Is like, we're nowhere near a top. People who are scared we're going to bear market. I'm not so. I'm pretty certain that's not going to happen. We're only halfway through this bull run, and so my conclusion is that Bitcoin has kind of three chapters to its bull market. You have the opening act, which is here. You have the middle act, the stage 2 act, where we move upwards, and then the last bit is where everything goes haywire and we go into a mania phase. And a lot of people are seeing that, like, comparing, are we here or are we here? Well, in this cycle, these two bumps are together. We are completing these two bumps.
Yeah, I just don't see much of a difference there. So
And
but
it's the
those
same
two
here.
bumps took a while. Those two bumps took a good year to achieve.
Yeah.
So we could have a consolidation into the halving here.
Yeah,
So
I agree.
What I compare to, if you look on the on-chain domain, is that everything looks similar to this earlier phase, which brings the you think, whoa, that was a long time ago, it's very illiquid. Well, actually, the whole market is very liquid right now compared to how many coins are in supply, and it's only a few big players. Like back in these days, you had a few whales pushing the whole market around. Now you've got a few quant funds and a few big institutions pushing the market around. So it is trading very, very much like a shitcoin or an early stage coin. You see it in the volatility, you see it in the price action. And where we are, I surmise, is around here in this cycle. We need to flatten out a bit. Maybe we'll see a dip, but that'll set us for the next strong part of the bull market.
Yeah, and speaking of that, how much do you think the altcoin exodus had to do with this run up from 6,000 to 14?
So was that what did you say, exodus?
The exodus out of shitcoins. Like Bitcoin dominance has went from 50 to 70 over that time period. We've kind of been stuck at 70. But Bitcoin's dominance going from 50 to 70 over the last 3 to 4 months. How much did that have to do with the big meteoric rise in the price of Bitcoin from that $6,000 area up to 14? I think that was most of it.
When we saw that meteoric rise, that had screaming all over the fingerprint, a quant fund or a series of quant funds utilizing $500 million in a US dollar or Bitcoin trade account on BitMEX. So I don't see that as altcoins coming in.
I see more the influence of liquidity gains on BitMEX as the
Yeah.
rise.
It was
than
BitMEX
migration
led, and it wasn't
rotation from
altcoins.
But BitMEX doesn't settle, right? This was my argument earlier, right? This had to be on a spot exchange. It doesn't matter how much volume is on BitMEX. Someone has to move the underlying price somewhere else.
That's what I thought, but the reality is
that's actually
BitMEX moves the price and it settles in Bitcoin.
Because it's actually
Right,
Bitcoin settled.
because Bitcoin is taking Bitcoin liquidity off the market by putting it into their
And remember, you can
into
run
their insurance fund.
you can run arbitrage across BitMEX to the other spot exchanges.
Exactly.
Right. So
I think
so it's
BitMEX
for real. The
plays
real
a
asset.
major role in price discovery.
It's not cash settled, it's Bitcoin settled. Therefore, you influence the price. And so I thought similarly, but like when I saw the gains and the underlying metrics, it was like, no, BitMEX is the big 800-pound gorilla in the space moving the price.
Well, oh, right, because they're not. That's a good point, because BitMEX settles in Bitcoin, unlike S&P futures, which don't settle in the form of the underlying stocks. They settle in US dollars.
Yep. That's one of the reasons that the Ethereum Quanto in BitMEX doesn't play that much of a role in the price discovery of Ethereum, because it's Bitcoin settled.
Bitcoin settled.
Right. If their Ethereum contract is settled in Bitcoin, then trading Ethereum on BitMEX wouldn't do as much to the underlying price of Ethereum. That makes total sense.
Right.
Unless it's Ethereum Bitcoin market you're dealing with.
Yeah, I think
which they
BitMEX
have.
is playing a major role in.
So yeah,
a lot
I
of
can
stuff.
tell you logically, whether you understand it or not, the reality is it has a huge impact. It's like,
So
you can explain to me there's no gravity, I'll drop an apple from a tree and show it exists, because that's what we're seeing on the charts.
well, that actually that's good food for thought there, because this means that BitMEX is even more critical to the overall Bitcoin trading infrastructure than I even thought yesterday.
It is by far the most
So
influential.
are you guys concerned about the regulatory pressure that could potentially be coming down on BitMEX with CFTC trying to go after them?
I think it's a good thing for the industry. I don't like BitMEX having that much centralized control over the price. And I look, anyone who's traded on BitMEX knows that there's a lot of shady stuff going in on this market. Like why does the market maker get its fill before I do? You know, I can put an order on BitMEX, and then my order being the last order standing, and then suddenly the order book pumps up because of the market maker, and they get their fill before me. And so that's a lot of dodgy stuff going on there.
I know a lot of people give me a lot of shit for wanting regulation, but I want these exchanges to be regulated. And we're gonna look at a few of you other charts, but there was another question here about my thoughts on the recent JP Morgan pop by the regulators about manipulating the price of gold. And again, it's a topic that I addressed 100 times. When an institution like JP Morgan or Goldman Sachs or Deutsche Bank or a hedge fund gets a big fine for manipulating an asset, the only time you will ever read about it in the news is if it's gold or silver, because that fuels the conspiracy and conspiracy buzz. There is no master plan to suppress the price of gold or silver. They're traders. They will bend the regulation. They will do shady stuff to profit from a trade. When you read the headline, JP Morgan manipulated the price of gold, did you even look at what they did? Do you even know if they were manipulating it to the upside or to the downside? If you don't know, then don't talk about that headline like you know what you're talking about. These are spoofing. These are wash trading most of the time. They're trying to skim pennies. And guess what? They do it in both directions. They do it to the upside. They do it to the downside, short term. This is opportunistic trades to just make a little bit of money. This is not some government conspiracy to have JP Morgan suppress the price of gold. Otherwise, they wouldn't be fined for it. This is acts of a trader to take an opportunity. I bet you they do it in oil. I bet you they do it in every single commodity. I bet you they even do it in the stock market. It's just that the headlines of some trader, was pushing around the price of Apple stock to take an advantage doesn't make a very sexy headline for the conspiracy theorists to get all riled up. Thoughts?
No, I agree.
I think also a lot of, so much of the US economy is based on its citizens to buy a lot of equities. A lot of the banks make their money through this. So a lot of the shady stuff that happens, it's their vested interest not to expose that in the regulated markets. I think a lot of crap happens there, even in the regulated markets. You can see in the charts.
No, I agree, but a lot of crap does happen in the regulated markets, but it's a million times less than the crap that happens in unregulated markets.
You know, I've never worked in a $1 trillion hedge fund, but I kind of get the sense that it might not be the case. You have enough money to move the markets around, you start to shape that chart. And when I look at Forex, that is shaped. And I learned that off crypto. This is one of the things what I like about shitcoins is it teaches us how to build, how markets are manipulated within a test tube environment.
And going back to regulation for a second, look, guys, I would love to trade anonymously on BitMax for the rest of my life. And I think the regulation should be that I could trade anonymously on BitMax the rest of my life. What I want regulation is I want BitMax to be regulated, and I'm not picking on BitMax here. We can talk about Deribit, we can talk about Bitstamp, we can talk about OKCoin. It doesn't matter. The point is, I want the exchange to be regulated, that they are not doing shady things, and that they are not going to run away with the Bitcoin, and that they are not trading against their customers, though I'm not accusing that they are, and that they have fair practices on people getting filled. I want the exchange to be regulated, not the user of the exchange.
That being said, I think if you're gonna trade in this market, like you should get that this is zero-sum game, and you should accept the reality that you're fighting against possibly shady people.
But I want that zero-sum game to be fair. Like I don't want some friend of the exchange with a big hedge fund to have an advantage on his positions versus my positions as a single small trader. I want that game to be fair.
I agree with that, you know, and I would say, you know, like I always say, you know, it's a zero-sum game. Picture this as we're playing poker. There's like 5 people around the table who are the players, and there's a sea of noobs or speculators who are losing their money. Okay, there's only about 5 people at the table that can move the price around. And it's not a zero-sum game. It's actually a negative-sum game because you've got Arthur over there taking a cut of every trade. So whoever wins, it's the scrap left over after the house takes it.
Again, I don't mind him taking a cut of every trade. He built a good business. He built a profitable business. No one is forcing anyone to trade there. He doesn't have a monopoly. But I do want regulation saying Arthur is not allowed to trade on his own exchange. And if he's caught trading on his own exchange, he goes away for a long time.
I agree.
That's the kind of regulation I want.
I agree totally. You can't have the house betting in that game.
So in that poker game where you're saying those big whales should not have an advantage over the small guy by, let's say, having cameras to see their cards.
That's correct.
Right? And the house itself shouldn't be able to sit at that table.
It's interesting because it's more like blackjack. Everyone's playing against the exchange. That's my view of BitMEX. We're trading against the each other, but as much as that, we're trading against the house.
All right, you want to show any more charts?
Yeah, let's
well, I'll try to bring you another one of these videos, maybe on Thursday, if we can get everybody together again. Maybe tomorrow, maybe on Thursday, probably on Thursday.
Yeah, well, while I got this in front of me, you can see this MVRV. You know, in the bull run, you have a couple, like a bump in the middle, and remember the structure of this market looks more like the earlier bull, and we're repeating this bump, and it's actually near the same levels. So this is the end of stage 1, act 1 of the bull market, moving into the second. I'll probably move along to this indicator, which is going to go live on my site in the coming week. It was created by a guy called EX on Telegram. He's ICO Explorer on Twitter. He asked me to create this live chart. He actually tweeted it out earlier this year. And this is VWAP, volume weighted average price, using the volume on chain. So it's taking a kind of the price weighted by on-chain volume, and this and we've done it over very much different moving averages, and then the infinite moving averages, the full VWAP, which if anyone is familiar with some of these with realized price, you'll see that VWAP, and even Nick Carter says himself, realized price is kind of on-chain VWAP for the price of Bitcoin, and you'll see that's almost identical to realized price in shape. And so what you can do there is do the ratio of the blue line to the red line, which creates the equivalent of MVRV, which was exactly what we just saw in the last this MVRV shows us market tops and the bottoms, and the VWAP very similar but different, slightly different methodology. And you can see this, the tops there. I like it better than MVRV in that the tops are very static, very like the level you can use, whereas in MVRV you see each top we're going slightly lower from the early days.
You have to Z-scorize it to.
Yeah, so our friend Z-scored it to get them level. We don't get that with the VWAP, and you'll see that it even works in the early days here, where it's picking these crazy peaks. And remember, this stuff here was Bitcoin price and electricity, and it's still working. Mount Gox started here.
No, Mount Gox, that's still Mount Gox. That should still be Gox. That's
this is electricity.
Yeah.
This
that's
is
where
Gox.
10 cents is Gox.
Okay, this is Gox starting there. Yeah. And that's Bitstamp there. Okay. So the interesting thing about this indicator that I really like is you can turn off the long-term MVRV, which is a macro cycle indicator, and you can start to look at the shorter time bands, right? So if at the very extreme, we can look at the 7-day, and it starts to look a little bit more like spent output price ratio, where you can call the local tops and the bottoms. It's not very bright on the screen, hope you guys can see it. What I'm looking at now is the 90-day, where you can start to see these little
yeah, the 90-day looks better. I was like debating with you. I just can't see the 7-day being all that useful.
I'll show you the last bull run, right? So the last bull run we had,
90-day looks really good, actually.
Right.
It looks like it can like predict the lows very well.
Tone, you got a real good eye with these charts, so you kind of yeah, like the 90-day works great.
Yeah.
So you see the dips below the 1.0 line. They don't go very low in a bull market. They go low in a bear market. They dip very low because we're in a bear, obviously. But here, we've just dipped here, and I would surmise that we're in this zone here. We may see a little flash down. We probably have a little bit of sideways to go, and then we're gonna.
Yeah, that's actually what I'm looking for right now. I'm looking for this big drop. If you want to put your cursor on that,
Sideways. After?
I'm looking for that. Well, sideways or straight up doesn't matter, but I'm looking for that dip out of the daily descending triangle, and I'm looking for that. And
it's gonna be a fake out. It's gonna be a bear trap. I think a bear trap dip. Often you get the bear trap.
Yeah, because most people will be coming for 5K based on the measured move.
Right, but the thing is, now everyone's talking about a fake out and a double fake out and a triple fake out. So you don't know which one's gonna happen first.
Yeah.
It could be down, up, down. It could be down, up. It could be up, down. But either way, I think we're gonna fall to. I still think we're gonna fall to below 8, down into the 7 range. I think you guys are more. We're gonna stay above 8.
I personally think if we break 7.9 on a closing consistent basis, I think that breaks market structure of the whole history of Bitcoin. That's fatal.
What?
Oh,
which
7.9.
Oh no, I don't think so at all. I think we can fall down to the 5K area and still hold the market structure.
Oh no.
No, I think
so.
7.9 breaking. If
the 200-day moving average breaks, that's unprecedented. We have had the 128 moving average break once in a bull market,
in 2013, and it dipped down and touched the 200. I think 200 is what, 7.9?
We're gonna flip back
They're
to my
about-
charts after you're done,
Yeah,
and then we're
yeah,
gonna
yeah.
go through these prices to
Okay.
close it out.
All right, so this VWAP will go live in the next coming week. I think it's a very powerful indicator. We can thank ICO Explorer for wanting to make that public on a live chat. And what else have we got? We've got, there's the RVT. Do you want to talk about the RVT, David, or not?
RVT was initially published. Well, I was doing experiments with this back in December, but
Okay, David was the first guy that created this, but then it was publicly tweeted independently using a guy Checkmate.
Checkmate actually invented it on parallel with me. He just published first, so he gets all the credit.
Yeah, but I actually built this chart for David before then, and we've been using it internally. So what it is the realized value divided by, rather than the market cap, we're dividing it by the transaction volume. And transaction, remember, is a proxy to the market cap. They track hand in hand typically, and it gives very clean signals of the bottom. There again, another indicator showing a bottom, and it helps with tops as well. You see it topping there, and you can see we're nowhere near a top here.
Yep.
But there's a word of warning is that the transaction volumes, as we covered before, are they're dwindling because it's all hidden on exchanges and OTC swaps. So
And just people holding more.
so I wouldn't be
general.
surprised if the peak for a top is not as crisp, and it might be in this zone here rather than this zone here, because we're seeing less volume. And I think that's really about.
Yeah, we can do another show
that's-
later this week because we're still going to be hanging out for a few
Yeah.
more days.
Oh,
And,
just finally to sum this up, this is the
Accumulation.
on-chain volume. This is the on-chain volume profile, and you can see this is the bull market we're in here. All the prior markets traded this amount of coins in the early bull accumulation band, and you can see it
significantly smaller.
so much less is traded on chain right now. This structure is unlike anything. It's much more reminiscent of this early stage where we had much less coins trading again. So be wary if you're going to compare our market to this 2015, 16, 17 market. We're really in early shitcoin land in terms of price movements and market structure.
Yeah, I think our next video will focus a little more on the fundamental side of things. I do want to explore your view that if we fall below 7.9, how and why it endangers the Bitcoin landscape. So I want to get into more macro talk in our next show later this week. So should I head over, grab screen share, and we're going to close it out?
Sure.
All right. I mean, I'll just stay here. It's fine. No, just don't. You guys are good.
That's gonna.
Did you stop the screen share, Willy?
Uh,
I'll just steal it from you.
you can take it.
Oh, you're gonna walk away?
Yeah. Just gonna take a quick break.
All right.
Back, see.
Yeah, come on back. I want your predictions.
Okay.
right.
It's creating new.
It's a no, you did well before. All right. Oh, we're here. All right. Hey guys, once again, before we close out and I get their probabilities of how likely we are to go to a new all-time high, how likely we are to pull back to 7K, my usual questions with guests. Once again, I got to plug the Financial Summit. Signups are going good, and we might actually close signups very, very soon. Probably in a few weeks, we might actually end it even a few weeks before the summit. So check it out. A few more pictures might be coming up in a minute. I have one workshop coming up. That workshop is in Bucharest, and I don't have any webinars on list anytime soon. This might take a little while. Oh no, that's not bad. Workshops. I got one workshop in Bucharest. You can keep an eye on my calendar so you know where I am. I am, as you guys can see from my travel calendar, we are currently in Azerbaijan, and from there I am off to the Republic of Georgia. So you can see it here, then Ukraine, then Prague, and then many other countries. All right. Let's get back to the charts for 1 second. I'm just going to pull up my charts. I need to, unfortunately, the market remains in completely neutral territory. Oh, I should save the bandwidth. On the weekly scale. On a weekly scale, I drew that green line saying, hey, if this week we go above that green line, that would be a long bullish trade. Unfortunately, that relied on the sequential system closing last week as a green one, which it did not. Last week ended up getting closed as a red one. So that means this green line now gets deleted. And I think there it is. So right now we remain neutral. No matter what happens this week, we'll be neutral unless we fall below 9,800, and then a bearish trade will activate. So this red line, I can actually raise it up a little bit, and that becomes my bearish trade the moment it crosses last week's low. There you go. Now, one more chart I'm going to look at is the daily chart. Just going to go to the current levels, and we're going to close out the show with our predictions. So here is that descending triangle on the daily. I've been paying very close attention to it. We are hovering near the top of the triangle, which is a little more bullish than bearish. I believe the more likely path is the breakdown from this triangle. I believe that breakdown will take place in early October. That's my most likely time element for that breakdown. You see this arrow happening on October 5th, and I will talk more about that as my time cycle. Another critical date I've been talking about for years. We'll see if we break down on or around that date. That's what I'm looking for. Now, the big question is, I'll answer it first. What do I expect at the breakdown? Now, look, we can fake out to the downside, then go up. We can fake to the upside, then go down. We can fake to the downside, then fake to the upside, and then go down. Right now, I'm giving this a 70% probability of breaking down. And if we do break down, I do expect the price to fall to the low $7,000 range. My most, for me,
that's your measured move? That's a measured move based on the triangle?
Did I lose my camera here? Oh, Willy, for some reason your camera is still on. Oh, well, actually, no, we're fine. No, man, that's my, no, you're good. My measured move is down to 5K. The measured move is down to 5K because that's the fat part of the triangle. If we break down from 9.5, that is about 4,500 down, or let's say 4,000, 4,500 from 9.5 takes us to 5. So the measured move is 5,000. Because this triangle is happening in an uptrend, I think it will be difficult to get the entire full move. That's why I'm looking at half the move instead of a full move as a reasonable target. I am looking at the low $7,000 range as the target of the triangle. If it breaks down, which it doesn't have to do, maybe my probability is in 70-30. Maybe I'm about 65% certain that the triangle will break down. So that's my outlook. And Murad, we're gonna get your answers as well real quick if you can.
Murad?
He's in a trade. By the looks of it.
You got 2 minutes for us?
Yeah, what's up?
Okay. Well, I can repeat your answers so you don't have to move. So my questions to close off the show, I'm gonna cut the screen share. I don't know if you want to jump back on the couch, say goodbye. Though I did tilt the camera over a little bit, so so they won't actually see you. Oh, yeah, well, see there you are. And so my closeout questions are this, and we can dig into this more on the next show. What is each of yours probability out of 100 that we will fall to the low 7,000s or lower before the halving?
5%.
Can I move the target to 7,000?
No.
Well,
No, 'cause
7,000.
it has to be the same response
same
for everybody.
No, but it's the vicinity of 7,000.
Low, below
Low-
75, low.
Like, yeah, like the low, like lower than 7,500.
That's that whole structure there, right?
Yeah.
I'll say 10%.
10% from Murad.
Uh,
What if I move that up to the low 8,000s?
then my percentage would correspondingly increase.
It would be,
Um,
that's
too
black
much.
and white difference.
35%.
35. So 35% we go to the low 8,000s. 10% we go to the low 7,000s.
15% low 7,000s. 35, yeah, 35 to
35 to low 8,000s.
Yep.
Willie?
Low 7,000s. If we're talking about like a wick, a wick.
A wick's
doesn't-
fine.
Does not count. Right?
No, it can't.
So if
It
the
can be
wick's-
it can be
wick's
on a
down-
wick or on a close. It doesn't
Oh,
matter.
That's gambling, right? But I'd say in terms
A
of
tradable wick, not like a Kraken wick.
like I mean a wick within like the 4-hour chart, I would say exclude. I would say 5%.
A tradable, like
5%. 5%.
5%.
If it breaks below 7,500, because the reason behind that is it'll break all our models. It's below the 200-day moving average, and on chain is very bullish. But if you were to say low 8,000s, which is the support of 200-day moving average, much more like Murad, I'd give it a 35% as well, maybe even higher.
Right. So right now we are at around 8,100 on the 200-day moving average.
Yeah, I've got it. Yeah,
Okay. So
80,
about 30.
30, 8,003.
Got it. All right. So my next question. Oh, Murad, we're not done yet. But you can answer from there. My next question.
Yeah.
The probability that we close the year above 10,000.
above 10,000.
We close the year above 10,000.
I would say 80%.
Above 10K. We may be ranging for the whole year, like for all I know. 60%.
60%.
Yeah.
Oh, yeah.
65, 65.
65.
Yeah, 70.
You said 80.
80. Yeah, I'm
65.
I'm very much Murad, right?
Yeah.
I'd say even higher. I'd like.
How can you think we're going to be below 10K by the end
It's
of the
like,
year? That's
I'd say 90%.
Yeah.
I'd say 90, 80,
Okay.
90.
Well, I'm
something like that.
85, I would say 85.
Okay. Final question. What is the probability of a new all-time high before or around the halving?
60%.
60.
All right, 260s.
I think higher. I think 75.
75 for Willie. Willie's the big.
Well, the thing is,
Willie's the biggest
we've
bull
got
here.
So much time to burn. We were like 5-6 months away.
Yeah. So I think the latest halving numbers is around May 8th. I think it's speeding up. I think it's like May 7th now with all the hash rate coming online and
Yeah.
Bcash dying.
There's a few key indicators. One is the alts pumping Litecoin's bullish, on-chain's bullish. I don't think we can contain a sideways movement for another 6 months,
Yeah.
7 months. That's too much time to burn. This thing wants to move.
So you're gonna go 90?
Well, the other scenario is
I'd go in the 80s.
consolidation
80s.
here, then move up to 17K, consolidation there, and then rip massively after.
Yeah.
So let's see.
All right. All right. Those are good. Good predictions, guys. All right. We're gonna go get some dinner. Thank you so much for watching, guys. And I'll try to get everybody together. We're gonna talk about the macro picture a little bit. Worst case scenarios, best case scenarios, what these guys are seeing on the mass adoption side, what these guys are seeing on the institutional adoption side. And we'll bring you a more macro picture in our next stream, while this was the more technical picture. Once again, check out their site. There's not much there, but if you're curious who these guys were, you can go to, I'm not screen sharing at the moment. Let me go back to screen share real quick to show your website. You can check out adaptivecapital.co. You see Murad's information, David's information, and Willie's information, and all their links to their Medium articles, to their website, to their Twitters. And you can check out Willie's work at woobull.com. In the menu, click on charts, and that's where you'll find the latest stuff. As usual, I am, of course, Tone Vase. You can check out my site, and if you want to support, check out the affiliate section. All right, guys, thank you so much for watching. This has been a great episode, and I will see you all on the next one. In tomorrow's episode, I am going to try and bring you some traditional markets and oil. Didn't get a chance to talk about oil. I'll probably do that tomorrow along with stocks, and then we'll get these guys back on for a more macro look at Bitcoin. All right, see you all on the next one.